Hello, everyone, and welcome to the Journey to Multifamily Millions. I'm your host, founder, and CEO of ZANA Investments, Tim Little. And on today's show, we have with us Jonathan Tonks. Jonathan is the founder and managing partner of Provision Space, a real estate investment firm whose goal is to generate passive income for their investors through real estate syndications. Jonathan is passionate about developing leaders through business creation, investing for generational wealth, and doing his part to end homelessness. He began investing in real estate in 2020 and currently owns nearly 300 units valued at over $23 million. Jonathan, welcome to the show.
Hey, thanks so much, Tim. It's great to be here.
Yeah, it's great to have you. So I gave everyone a really high level overview of your background, but on this show, we really like to get into the details of how you got started on the journey to multifamily millions. So please tell us a little bit more about yourself and what brought you into the multifamily space.
I think it's a great question to start with, and it's something that I reflect on quite often because sometimes I forget what it took to get to where we are today. And it's quite exciting to look back sometimes and reflect on that. But I grew up in a home where being in a W-2 corporate job was kind of the goal, is the ambition. I come from an engineering family. Both my parents have electrical engineering degrees. Their parents and my grandparents worked for automotive companies. And that was my vision as I was young. I wanted to work my way up the corporate ladder, be a lot like my dad, manage projects, create cool vehicles, and just run that route. And for the early stages of my life, I was running that path, and it was quite exciting and something that I liked to do. But something that I believe was instilled through my parents just growing up was being curious, asking a lot of questions, always learning new things and trying new things and not being afraid to try new things. And with that, it started to develop in me and in my mindset more of a business approach, an entrepreneurial approach. Nothing majorly successful through high school or college or even after college, but I always knew I wanted to, in some degree, have an entrepreneurial endeavor, create something, use my creative capacity to bring something good to the world, something that's valuable to people. And it really became an opportunity when I graduated college. I moved across the state. I'm in West Michigan now, but I moved from the east side over to the west side of the state. And when I moved out here, this is again working for automotive supplier in corporate America. I moved out here and I bought a duplex. And it came from the last few years, in that time frame of researching and finding what business venture I would like to do, whether it's micro business or be part of a larger corporation. But then going back and forth with some friends of mine and learning about real estate up until this point. So graduate and move over to the west side of the state and I buy a duplex, living in one unit, renting out the other. And that's when it really started to click. And there was the application of going from books and research and dreaming about what is possible into, all right, we're started. We're on ground zero, and this is how we get started. So at that point, I was hooked from having my mortgage paid for through renting it out to that resident. And then it just became a search and an adventure of how do we scale from here? I didn't have the funds or the connections yet at that time to scale from a single family point of view or duplexes or quads. So I started searching and going to meetups, going to events, meeting real estate professionals, business professionals, and just asking, where do you learn to do commercial real estate, or where do you learn to scale a portfolio or business? And a few different recommendations came out, found some mentorship and some coaching. And I got plugged in, started to hit the ground running. Had a great coach, have a great coach, a couple coaches that help guide me. We work on different opportunities together all across the Midwest and the Southeast and in the United States. And it's quickly expanded and quickly grown into quite a significant amount of units for being a new into business now, running Provision Space and being the managing partner of an investment firm in that degree. So that's a high level demo real quickly and how I got started and got to where we're at today.
Yeah, and so there's just so much in there to unpack. So I think I'll take it from you really starting out with that duplex and doing the house hacking thing, right? Living on one side and then renting out the other. So effectively, you're living mortgage free. Someone is paying for your mortgage, and that's so smart and something that I don't understand why more people don't do. But I'm one of those people, right? I got started a little bit later in terms of discovering the wonders of real estate. And so it wasn't until I had a wife and kids before I realized, like, oh, I should have house hacked. I
Mm,
should have bought a duplex. And by that point, it wasn't practical.
yeah.
So I just had to buy a duplex that was strictly for investment purposes. And it's better to start than not start at all. Start late than
Absolutely.
not start at all. But I applaud you for starting that earlier in life. And then it's that whole discovering multifamily thing that I think is really interesting too. I feel like there's this curtain over it and that most people don't even know it's there, but it's been there the whole time until
Yeah.
eventually that curtain is lifted. And then you're like, oh, yeah, like where has this been this whole time? And you start to see the returns. And then again, you wonder, why aren't more people doing this? Why is everyone just invested in the stock market or in bonds or everything else when it's so much more lucrative? There's so many more tax benefits to
Mhm.
the passively investing side. And I really think it just comes down to so many people just not knowing about it. Is that your experience?
Yeah, I was gonna say, even though it wasn't a question, I was gonna say the piece that stands out to me when I look back at why I didn't think about it sooner is because it's not taught and it's not something that we hear at the dinner table of, hey, you know what you should think about is investing in a commercial property. Because my up until I started receiving some sort of coaching or education on my end, I always thought the banks owned every apartment complex I saw driving down the street. And it becomes this epiphany when you go to a conference or you talk with people who have thousands of units and you realize that all these apartment complexes down the street are owned by people no different from you. They educated themselves, they got connected with the right types of people, and they're balancing their skill sets together to do these properties together. And it just became that realization of, I just got to meet the right people and I got to be educated by the right sources. And it really became that epiphany of, oh, the banks don't own this apartment that my friend and I are renting. It's whoever Joe Schmo down the street and his private equity firm own the property. So it just became a realization, I think, too. So the people got to talk about it a little bit more. And I think social media is helping with that. There's a lot of people like your platform, right? This is a great place to educate people. It's in a media that's easy to consume and it's easy to comprehend. So I think it's starting to get out there more, and that may attest as well to the youth and the age that where I was able to start. And I met a lot of teenagers who are getting started, and it's so exciting to see because it's been accessible to them since they were even younger. So these platforms are helping a lot. That's it.
Yeah, and obviously technology changes and the availability of information. I remember when I first got interested in real estate before, and I should almost say I luckily didn't do anything about it because it was right before the crash.
Mm,
But I went to a conference and everyone was selling CDs, and it
mhm,
was all these basically classes on CDs. And so you could throw it in your car and learn how to drive for dollars and learn
right.
how to cold call people and solve their problems and in order to get their house for pennies on the dollar and all that stuff. But there's a high barrier of entry there when one, you have to go to the conference itself in order to get any of that information.
Mm,
And then two, you have to pay hundreds of dollars, sometimes thousands of dollars for the CDs or DVDs, whatever the case may be, in order to consume it. But nowadays, it's everywhere. And in many instances, it's free, at
yeah,
least to get a basic understanding until you get to a point to where, like you said, you decide that this is something that you want to do yourself. And then you start to invest in yourself and put that money into the
right.
coaching programs, the mentoring programs, so forth. Because I find it's really hard to be successful in this business if you're not surrounding yourself with
Mhm.
like-minded people and people who are smarter and further along than you are.
Absolutely. Absolutely. No, you hit it on the head there. I would even say too, maybe as an encouragement to people, multifamily isn't the only option. And I know that's kind of counterintuitive to what we share with people. I chose multifamily because it made the most sense for what I like to do. And I tried to scale a portfolio of multifamily units. I know guys who do short-term rentals. I know guys and girls who do short-term rentals. I know guys and girls who do RV parks, hotels, car washes. There's so many different asset classes out there that you can get into, and they're being syndicated if that's something that's interesting to you. So it's not that multifamily, or even we can go at a higher level. It's not that real estate is the only thing available. It goes back to what we're talking about, like just educating yourself, seeing what works for you, and then asking the question, do I want to be active or passive? Do I want to make active income and be involved, or do I want to be passive and find people, partner with people like yourself, Tim, with me, with our companies, and let us handle all of the education and the background and finding everything, finding the properties, doing the due diligence, doing the asset management team. And then it just becomes a question of what aligns with you and the values and the goals, and find the one that works for you. And I think that's going back to what we talked about the stock market is, again, there's people who do option trading, and there's people who do very well in the stock market. They're able to hedge their investments. They're able to keep consistent growth. Nothing wrong with that at all. It's just you got to find what works for you. And for me, I get the most excited about multifamily. So that's what I'm going to share with people.
Yeah, exactly. And I think the media and financial institutions and everyone else has convinced Americans that diversification is just having a lot of different stocks. But that's a very strict term of diversification because you're diversified in one thing, right? So it's not to say that you have to get rid of all your stocks or anything else that should be or could be a part of your portfolio. But hey, there's other options out there. Like you said, it doesn't have to be real estate. There's people who do, like you said, ATMs or mobile home parks, whatever the case may be. But for God's sakes, diversify so that if something catastrophic happens in the markets, you're not getting 100% of the hit from that.
Exactly. Yep. Balanced portfolio. Yep.
Exactly. And so you talked about scaling, you talked about going from duplexes to these much 100+ unit deals. What exactly did that first commercial real estate deal look for you? Like, how were you able to bring that deal together? What was your role in the deal? I'm interested in hearing more about that.
Yeah. Like I mentioned, I had I still had at the time, two coaches who had built a partnership together. They had complementary skills. So one was excellent at marketing and acquiring properties. Another was more of a financial background. So they paired up really well in terms of underwriting, finding the units that they're looking for. I came in kind of on the latter half as one of their students that they're mentoring. And I knew right off the bat, after going through the education, self-educating, watching videos, asking these people questions, it really came down to what is your superpower? What are you good at? And what value are you bringing to the team? And for me, it was coming from an engineering background, I knew how to underwrite, or I was developing that skill, getting better at underwriting. The numbers made sense to me on how value is created and how do we organize these in a way that's coherent and accurate. I think is the key word there is accurate underwriting. But I didn't enjoy sitting in front of a computer for hours and hours doing underwriting. It just wasn't my natural competency. I really enjoyed speaking with people and sharing what we do, because if I mentioned this to an investor the other day. I told him, I said, if I had all the money in the world, or make it more realistic, if I had Elon Musk's net worth, I would pour so much of that. Let me be more clear. I would pour at least 60% of that wealth into real estate, more specifically into multifamily. And if that's the case, if that's my mentality, I want to share that with other people. If this is what I'm going to do with my wealth, I want you to be partnering with me if that's something that's aligning with you. Right? So it became my role, to answer your question, my role was more on the investor relations, raising capital. And then on the back end, after we closed, it's more on asset management, working with the property management team, making sure we're executing that business plan. So my coaches, they found the property, they did all the due diligence, they negotiated financing and acquired it. I helped raise capital to close, and then we obviously all bought it together with our investors, and now we manage it together.
Yeah, that's a good segue into the question I was going to ask you, because, I'm always interested in how people leverage the skills they've learned from their W-2 jobs as they transition into real estate. And so when I saw that you were a continuous improvement engineer, I immediately thought, I have to imagine those skills are a huge asset, especially when it comes to driving efficiency in asset
Mhm.
management. And so I'm asking you, is that the case? Is that something that you really hone in on, or is it just something that you have no interest in, which is just as possible, I guess?
That's such a great question because now that I think about it, I'm almost not using my engineering background. I am to a degree. I look at engineering as problem solving. What I was educated in is how to be a great problem solver, whether that's a mathematical problem, whether that's a design engineering problem, or whether that's a people problem. And from my point of view, I think I add value to the team when it comes to engineering my W2 competencies. I believe I add value from the perspective of being creative and persistent and organized in how do we execute this business plan to get the most profitable results out of this asset. So I bring that to the team, more idea generation and brainstorming, pulling contractors and finding ways to make it profitable. But again, I guess I just like talking to people and sharing what we do. It's almost just being an ambassador for the company. I love it. So I'd rather spend more time sharing with other people what we do, whether I use my previous skills of management and engineering or not.
Yeah, and you definitely need to stick with what you're passionate about because you'll ultimately do better at it. But I just think it's so funny that you say you see yourself as a problem solver because as an army officer, I see myself the same way, and I'm sure we come at problems from a very different methodology, but at the same time, we're taught to identify problems. Here are the list of potential solutions. Here are the risks associated. How do I mitigate those risks? And trying to find creative solutions. So I just thought that was really interesting that despite being completely different backgrounds, we see ourselves in the same light and probably may even get to some of the same conclusions, but probably come at it from a very different place.
Yeah. No, that's a great point. And I think your ability to problem solve and my ability to problem solve, even if they're different, it doesn't mean one's better or worse, right? We're still solving a problem.
Absolutely. And as I'm sure you've already seen, problems do arise
Every
on
time.
both. Yeah.
Yeah.
And
You can
it's
guarantee it.
it's usually before you even get to the closing table. So there's plenty of opportunities to exercise that problem solving capability.
Yeah. You listen to a lot of the people who are having or amassing massive portfolios, and you listen to those first couple deals that they did before they had the broker relations. You listen to the fine details of what they said and how difficult it was to close those first two to get that trust and relationship built. And they just never gave up. They're always trying something new. And it's again they're more creative than the next guy in how to solve a problem. And that's how they won the first one. And that's what catapulted them, generally speaking. I just noticed that when I hear a lot of guys who are doing well when they reflect back, I hear that a lot.
Yeah, I would definitely say that just tenacity is a core trait when it comes to who's successful in this business and who is not. But that could probably be said of a lot of businesses. But that segues nicely into what I was going to ask you next in terms of, you know, you're relatively new to this space like I am, but you've still been able to do some big deals pretty quickly, just like I have. So I wanted you to talk to me about what your vision was when you started off. What did you think it was going to look like in, 1 to 5 years? And what things do you think have been key to your early success?
It's funny, Tim, because when I set goals, I don't set realistic goals, and maybe that's something I need to work on. But when I envisioned starting this company, I literally thought I would change the world. And to the degree that happened was maybe amassing large fortune, giving to charities and organizations that I believed in, maybe starting new companies. But when I guess to be more practical, when I started Provision Space, I just wanted to learn how to be a general partner or a GP. And I set a goal for having, I think it was 200 units in the first year, which is when you have gone from two, a duplex, it's like that's 1,000% return. Like, how do you get to 200? And it really, just looking back, that's all I wanted to do was scale as quickly as I could, partner with excellent people of high character, high integrity, and people who I want to repeat business with, do more opportunities with. So in the early years, that's like in the early stages, that's what I envisioned was creating a company that was large enough to meet the goals and meet the needs of the people I care about, family, friends, Still working on ways to make that all happen, especially from a funding perspective and quality perspective. But that was more so the vision, just how do I get to 200 units? And months later, we're at almost 300. So it's a blessing for sure. And I'm sorry, what was that second question that you had on that?
So it was really like, what do you think are the things that have been the keys to your early success?
Yeah, I would say, I was going to have a different answer, but I would say commitment is the biggest one. If you're going to be in this business, you got to be in it. And I've noticed it's quite difficult to do this on the side, which is how I've been doing it so far. I'm still committed to my W-2 job while I build this business. But being committed from a standpoint of always looking for ways to add value to people, as much as I'm more introverted, so as badly as I don't want to go meet new people, I get out there and go try to meet new people, shake hands. And again, it's just the perspective of you're educating. So people need to know what you do. And if I didn't even know multifamily was a thing that I could be in 2 years ago, how am I going to expect a potential investor to know that they can be part of this? So it's getting out there, spreading the word, as well. I'd say, again, the mentorship side. So having a coach that asks questions, to pick their brain really and glean off of their experience. So that kind of tailors into, I guess, to summarize, committing to the business, being around people and being in an environment, like you said, that's encouraging, that's uplifting, and it's real. It'll tell you when you mess it up or when you need to adjust and make some changes in your strategy. But then if I had a third one, I would say going to as many events as possible. I made it a goal at the beginning of the year for at least the first half of the year to go to a conference every month. A lot of them out of state, outside of my area. So I've been to a conference every month this year, and I host an in-person meetup in my local city. So I just try to meet as many people as I can, and again, surround myself with great people, experienced people.
Yeah, that's huge. I mean, getting in front of as many people as you can, because those, like we talked about earlier, those relationships are key to success. So this has been great, but right now we need to move on to the turbo round.
Let's do it.
All right. So the first question in the turbo round: what is the one red flag every investor should look out for? And that could be either a passive or active investor.
If I could only pick one, because there are a lot of red flags to be aware of, but the biggest one that comes to my mind is who's the general partner team that if you're active or passive, especially if you're passive. Try as best you can not to have the shiny object syndrome, and make sure to keep the investor with the you trust. And I noticed that with my investors, it takes about 2 to 3 months, just a pure education, building a relationship before we start that discussion of, I have a new opportunity, is this something you're interested in? So just make sure you trust people, not to say or call anybody out, but you just need to make sure that it's someone that you would like to do business with, someone that you want to have a long-term relationship with.
Yeah, absolutely. Because most of these deals are long-term relationships. You're talking, anywhere from 3 to 7 years, and that's a commitment. All right. The second one: what is a myth about this business you would like to set straight?
That you have to do it alone, or that you can't do it. I think just getting those out of your mind. There's too many people who have done it, myself included, to say that it's not for you. There's so many circumstances that people are going through, but it's not the reason why you can't get into this. So I guess the myth is that banks own all the apartments and you need an insane amount of wealth to buy these apartments. You don't, you just need the right team, you need the right partners, and you can do it together.
Yeah, I think that's key. And what you talked about earlier too, don't let perspective stop you from pursuing what you want to do. Because when you're on the fence about getting a duplex, even passively investing in 200 units seems just impossible because it's so far from where you are. I know I had that limiting belief at first, again, until that curtain was lifted. And I think a lot of people are in the same place. All right, the last one. What does success look like to you?
This is a great question, Tim, because I think it changes. Right now, where I'm at, I would say I'm nowhere near where I want to be in terms of growth of the company. We've got quite ambitious and lofty goals, but it's important to define success to your question. And to me right now, it's that the people that know me the best, I'm kind of pulling off of John Maxwell if you listen to him. The people that know me the best respect and trust me the most. So not that the people who see me on social or see me on platforms like this think that it's going great and that there'll be a great opportunity, which is what we're looking for, right? But it's the people who know me intimately, my family, my very close friends, the people who know my struggles and the things that we're working through, they respect and trust me the most. It's the most important. So it comes back to character and integrity.
Yep. And like you said, very rarely does success stay static because our goals shouldn't stay static, right? They grow and evolve as we do. Well, Jonathan, hey, this has been some great conversation. I appreciate all the knowledge and experience that you brought to the show. I'm sure you'll be an inspiration for a lot of people that are watching, think about coming into this business, and other folks that are just starting to get interested in multifamily because they're discovering it for the first time. Please tell our guests how they can get a hold of you and if you have anything else that you'd like to share with them.
The best way, so I put a lot of educational content out there just because that's what's helped me along the way. So my website, provincionspace.com, that's the best place to get in touch with our monthly newsletter. If you're local, and I'd love to meet you in person at our meetup, come join us at a meetup. But I'm also quite active on LinkedIn, just at Jonathan Tonks. You can find me there. Those are the two best places to get in contact with me. And yeah, love to meet people.
All right, awesome. Well, Jonathan, thanks again. We'll definitely have all your information in the show notes. I appreciate you coming on and look forward to seeing you do big things on your journey to multifamily millions.
Thank you, Tim.